Welcome traders to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I am here to give you the latest updates in the Forex markets as well as some key charts to watch for the week. So let's get straight into it. I'm going to start off today's with the big story. We're talking all about the US and Iran conflicts and what that means for your trades, including oil, gold, and the US dollar. So let's kick it off with a little bit of news first. So we have seen oil gap again over the weekend. As we know, the past couple of weeks, the US-Iran escalations have continued, and we have some more information on that. So just from a quick headline here from News Squawk, we can see that Iran said that it has suspended the implementation of the MOU, suggesting that the US had violated commitments within the framework. And then on the open, Brent crude oil jumped 2.4%. We've seen that come off that quite a bit now, but still that gap higher was seen. We can also see here it says the US and Iran continue to exchange strikes. Iran killed 2 service members in Jordan and 1 in Iraq. The US continued to target Iranian military capabilities. There's also a snippet here that says the US is said to be planning for a wider war, according to a US official cited by the Washington Post. So in terms of the war and how this escalation is continuing, then there is still some still some volatility and risk around, and there is not much US data on the board this week. So the market's going to be very sensitive to any headlines out of the US and Iran. And that's why it can be important to have something like a news squawk and keep on top of any kind of news that is coming out. And if you do want to keep on top of the latest news and information, please feel free to head over to our Telegram channel. QR code is on screen right now. So feel free to take a picture of that and join us in the Telegram channel at your own leisure. You can also head over to our website where we provide daily blogs on anything to do with Forex, commodities, and indices. So let's get into a little bit more of the details, and let's take a quick look at that Brent crude oil chart. So I posted a little bit about this recently as price was heading higher towards those key resistance levels. So last week, we also gapped higher. The market ran through 80.30 resistance. We then started to consolidate for a period between sort of the $87 level and the $83 area. The market was just kind of chopping around, and we actually formed this sort of ascending triangle pattern where the base of that was formed around about the $84 area, and then we had these lower highs coming into the market. We then had a breakout of that. Price rallied towards the close on Friday, and on the gap, we saw price gap up towards that 90.25 handle, which is this key resistance that formed back in June. So the market is now testing that. We're seeing it come off a little bit, but if the escalations are going to continue, could we see oil prices continue to rise? Now, on the chart, you can see I've got a adjustable market profile on there, and you can see that actually we do have quite a strong level of support coming in around about $84.50, $85, and that is the point of control of that ascending triangle. So if the market does pull back and push back and try and find some kind of support, then we could see that coming in and around that $84.50, $85, where we could see then a continuation of a move. We may just get a close of Sunday's gap, and that might then just trigger a pushback up above key resistance levels. Now, if price does get above 90.25, then that opens the door for a little bit of a bigger move. We could end up seeing price head up towards at least $94 per barrel, or at least 97.75. If I just put the market profile on the chart, just go from the swing low to swing high, you can see that consolidation that started towards the end of May, going through to the middle of June here. That consolidation there sees a point of control that's being developed at 94.70. So anywhere in and around there could also act as a strong resistance level for price. So if we do see a break above there on the market on the resistance area, we could see price head up towards that $95 handle. Break above that, then we're heading up to the 97. So that's when we're going to see a lot of interesting developments in terms of how would that impact global markets. We are seeing inflation, headline inflation coming in a lot lower recently, but oil prices have been down, and that has been a key factor to that. But now oil prices are starting to rise. So is inflation talks again going to be on the card? Since the low on the 2nd of July, prices are now up 29%. So there is a huge sort of move that's happening in oil at the moment. And if that does continue, then if we break above $100, then we are going to see some big rotations, I think, especially in terms of, your gold moving lower, perhaps breaking down through that $4,000 area, because all it comes down to is these bond yields, right? If we see inflation move higher, the dual mandate for the Federal Reserve is price stability and full employment. And Kevin Warsh, the new Fed chair, has said that their dual mandate and their priority of the dual mandate is inflation. So they want to bring inflation down. If oil prices are rising, they can't do much with that. They're definitely not going to cut in that scenario, and they might be pushing more towards a hike. Now, if we look at the US 2-year bond yields here, we can see that we're kind of trapped within a sort of rising channel here, right? We're just kind of grinding higher. We keep kind of heading back towards that kind of 4.3%, 4.2%. Can't really break that 4% barrier at the moment. So I think for the time being, you want to be more on with the yields. There are obviously situations where we can see yields fall, and that can be due to anything like a deal or another ceasefire. Let's say we see talks happening and a ceasefire comes out again. That would be pretty negative for US bond yields, and that would be negative for US dollar, negative for oil prices as well. And that can then obviously see gold push to the upside. Now, let's just have a quick look at gold. Let's have a look at some technical levels just to see where we are trading at. And at the moment, we can see we are at that $4,000 level. The predominant trend here is down, right? We're trading below the daily 50 moving average here by some way. And the market is down, from the highs of this year is now down 29%. So gold are really suffering from this, and that's again because of those rising US yields on those inflation expectations rising, and ultimately seeing the market try and price in Federal Reserve interest rate hikes over the cuts that were being proposed earlier in the year. Now, one thing you can do is you can come over to the CME Fed Watch tool. And here is where we kind of see the interest rate expectations from bond traders, right? So we can see that now we've had quite a significant change in this. So the next meeting is on the 29th of July, so in 9 days' time. Last week, we saw that the chances of a rate hike were at 41.7%, 58% chance, right, of a rate hold. So last week, that was quite significant. That has changed dramatically, okay? So what we're seeing now is bond traders are now 86.6% chance of a hold versus a 13.4% of a hike. So bond traders really have priced out, or nearly priced out, the idea that the Federal Reserve will hike interest rates on the 9th of July. If we go out to September, this is where it gets a little bit interesting as well. So there now we can see that there is a 53.4% chance of a rate hike. Okay, only a 39.3 chance of a hold, but a 7.3% chance of a 50 basis points hike. Now, that has also changed pretty dramatically as we've got closer to this date. Last week it was saying there was a 23.9% chance of a 50 basis point hike. And then we had all that inflation data, and now it's only at 5.4% going into 7.3% today. So it's looking a bit more forward in terms of what expectations are. September seems to be that we should see a hike in September. If we look at the overall figure there, you can see it says a 60.7% chance of a rate hike right now in September of 25 basis points at least. So the market is trying to look forward and see how that can occur. Now, obviously, we'll have some inflation prints between now and then, and it's all going to land on what is going on in the Middle East. And is there going to be some kind of relief there, or is there going to be a continuation of this? If oil sustains above sort of your $85, $90, $100 per barrel, then that is definitely going to be something where we see inflation continuing to have pressure. Now, we are seeing across the Middle East, or across at least OPEC nations as well, they are increasing their supply. So they're trying to kind of put a little bit of a price cap on this by increasing supply, which basically means there's more oil out there. Usually the cheaper the price of oil. But that only lasts so long when you've got these type of critical supply chain issues when it comes to the Strait of Hormuz. Now, just flicking back to the news on that, you can see here that there was a report that came out on News Squawk at 8:42 a.m. saying the Iranian Foreign Ministry says will not abandon talks with the US, right? 1 second, let me get my tool here. It says Iranian Foreign Ministry will not abandon talks with the US. Iran's sovereign rights over the Strait of Hormuz are non-negotiable. Now, obviously, that could be a big sticking point. So they're basically saying that they want to, still have the control of the Strait of Hormuz. But that's not necessarily what President Trump will want. Okay, he definitely wants to have some kind of ownership there as well. So yeah, interesting market at the moment when it comes to the oil story and the oil picture. That can have obviously an effect on what's going on elsewhere. If we see oil prices fall, that's usually going to benefit gold prices in the near term. If we see oil prices rise, then that's going to have a weigh in on what the inflation expectations are. Bond yields will likely continue to the upside, and if they continue higher, gold could break lower. So a very interesting week this week, I think, to see the developments of what happens in the global markets. So let's move on then. Let's move on to the chart check. And this is a part of the show where I like to pick out a chart for you to watch for the week. Now, usually it comes down to some kind of information that we find out there, or it can be down to just kind of like some commitment of trader report, some sentiment figures. So first thing I'm going to start off with is the currency strength meter and what it's telling us. So we've been a big advocate of buying the British pound recently, and we've been looking for opportunities to buy that against some currencies that are weaker. So the pound is still the strongest currency on the board. The weakest currency apparently is the Swiss franc. We also have the New Zealand dollar as a pretty strong currency too, as well as the Aussie CAD versus weaker currencies like the Swiss franc, the US dollar, and the Japanese yen. So lots of markets that have come onto the trade signals table of the currency strength meter going into this trading week. Now, we can see that pound US dollar is the top currency pair, and that is what I'm going to stick with going with this trading week, because the pound is actually very close to a level of support. So I'm just going to bring in the 30-minute chart of pound US dollar, and we'll just pop it to the daily first, just to give us a little bit of context. So what we liked about this market was, first of all, we're in a strong range. especially on a weekly chart. So the weekly range is sort of highs of 137.50 and the lows around about 1.31, right? Those two kind of key zones. Now, price came into the supporting zone and we had a commitment of trader report signal saying that hedge funds are aggressively selling towards these lows. That can usually mean we get a bit of a reversal signal forming, or a reversal in the market. So since then, price has reversed from that low. We are currently trading 305 pips above that level. When we go down to the daily chart here, we can see that we consolidated at those lows. We rallied, we formed a lower high and a lower low, and then price has now recently broken and made a new higher high. So we're looking for that lower, that higher low for a trading opportunity, right? And we can see here that price has come back into this previous area of support. So it's around about this 134.25, 134.50 handle on the chart. Okay, so that around that zone there, you can see that this has acted as resistance, support, resistance, 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 most recently potentially support. So how can we potentially trade this move? So how I like to look at a chart, or the way I like to break down the market is, you know, I always talk about this. It's the WCS method, right? It's the why do you want to be in the market? Do we have the conditions to match that? And how can we trade it in terms of, you know, a strategy, something that you can use to consistently enter the market, right? That's the method. So we've identified that pound is a strong currency. We had a COT signal down through here on the 23rd of June. We had a opportunity on the currency strength meter to say that it's the strongest currency. We also have a seasonal pattern that suggests that the pound is pretty strong this time of year too. So all of the kind of stars are aligning here to be for you know, a pound buyer. If we take a look at the commitment of trader reports here, we can see that British pound sterling has come off those areas now, that the longs have started to increase for the speculators and the large hedge funds and whatnot. So that's quite good there. If we go to, let me see if I can bring up this one. And then you can have a look at, okay, I don't think I can. Okay, they've put that behind a paywall now. You used to be able to go on barcharts.com and get that. Let me just quickly go to, where was I going to go to? Was it the seasonal chart? Let me go to the seasonal chart of pound and just show you how strong the British pound can be this time of year. So since this data has been collected since 1976, we can see that current year's price action is very similar to what's going on throughout all years history back to 1976, and we have a 77% correlation with that. And look how close price is following this potential seasonal pattern, which means that we could potentially see a top in pound around about the end of July, start of August. So I still like the idea of being bullish here. Now we have to match up the conditions with that, right? So when price is making higher highs and higher lows like this, I want to be looking for that change from going against the trend to go back with the trend. So at the moment, we've got that kind of forming here. I like to call them phase ones and phase two. Phase one is with the trend. Phase two is against the trend. I'm looking to see when phase two turns into phase one. Now, we can do that by looking at lower time frame patterns. So this is the daily chart. Price on the daily chart is making higher highs and higher lows. So I go to the hourly chart. I'm looking for, is price now starting to make higher highs and higher lows? And I can see we have something starting to form here. We have just found resistance at this 134.80 area, but look what's going on. The market is making lower lows and lower highs, right? So it needs to break out of this 134.80 handle. Now we could try and front run it a little bit. If price comes down towards that kind of 134.50 rebounds, I could start trying to front run it a little bit, maybe put one position on. If we break 134.80, that could be our second position. And then we could look to maybe try and add in a third position as price continues to push to the upside. Now I was looking at the market profile So if I go to the 30-minute time frame, I've got Friday's market profile here, and I've got today's current profile going on. Now, if I look at that, obviously on Friday, it was a little bit more of a normal distribution day, very range bound. Market traded between that 134.80 and 134.30, and we just kind of stuck within that range. If I look at today, we've kind of made a run for those highs, those Friday highs, and currently rejecting it. But we have some support. So we have the current day's value area high coming in at 134.62. So I'm going to set an alert at 134.62, because if price comes back down to here and on a lower time frame starts to change trend, I'm going to add in my first position around there. Okay, if it breaks down, that's fine. We do have point of control at 134.43, and that could be another area where I like to get long. But you know how I like to trade. I like to stack my orders. So that means that, you know, if I feel like, I always like to put in at least 3 trades. So I can break that down and I can put like 0.33% per trade risk on. Or if I break it down into 4 trades, I can put 0.25% risk on per trade. And I'm looking to see how that then plays out. So that's what I'm going to be looking for here. If we do get it down into that 134.60, I'm going to look to go long. If we break above 134.80, then again, I'm going to be looking to see if I can get long on this market. The market is kind of showing us that there is some potential opportunities there. Now, just to kind of keep on the pound for a second, we did also talk about other markets. And last week we talked about euro pound for a potential short idea. Now, euro pound came up into our resistance level on Friday, which was the 85.13 value area low of this whole sort of downward trend on the 4-hour chart, and it came into it and rejected it. I didn't trade it though, because it was Friday. I was having to hold this over the weekend, so I did not take a trade on this particular market, but I am actively looking for another in. So if price does come back up, maybe back into the swing highs here, I will look to take a position on euro pound to the downside as well. So keep an eye on those. Pound against Aussie, probably not the best one to look at anymore. Pound against Kiwi, not the best one to look at anymore because of what's going on in the currency strength meter. The best markets to potentially trade this is against the US dollar, is against the Swiss franc. And you can see on the daily chart, the Swiss franc, that is also pretty bullish. So keep an eye on those pairs going forward into this trading week. There are some others on there as well, but if you want to get some more information on this, like I said earlier, you can come into the Telegram channel. I'll be posting all about the currency strength meter there, what markets to watch out for going into the trading day. So let's move on to the final thing then, which is always the skill of the day. I always want you to take something away from this whenever you come and learn and join the stream. Okay, so one thing we're going to talk about today, okay, and what we've been doing a lot recently is a lot of meta trader tutorials. Okay, so today I'm going to show you how you can add your own indicators into MetaTrader, right? How you can create an indicator, how you can add it into the chart. So I've actually been building my own little initial balance dashboard, right? And I won't go into the details of what it actually is, but I'm going to show you how you can apply your own indicators to the chart. Okay, so let me just open this up first. I want to just make sure that this is good to go. So I'm just going to compile this indicator. Okay, looks all good. And then what I need is that over there. Okay, so I'm going to be adding the initial balance probability dashboard indicator to the chart, something I've been working on, right? And I'm going to show you how to add that in. So I'm just going to go to the S&P 500 here. And what I'm going to do is I just want to get a blank chart, right? So here's the S&P 500. I'm going to just add a new chart, file, new chart. We're going to go to index and US 500. You don't have to do this, but I'm just doing this because I want to add it to this particular market when I upload the indicator. So the first thing you want to do whenever you want to upload an indicator is you need the files. So you need I'm using MT4, so you need an EX4 file. But how you upload it is really simple. So in your terminal, just come up to File, Open Data Folder. Okay. When you open the data folder, you're going to get this, right? Now, this is your MQL4 or your MetaTrader terminal data folder. Okay. You can see in the list, it says MQL4. You want to click that. Okay. Once you're in here, this is where you can go to indicators, right? Now, you'll probably see that down here, I already have the initial balance probability dashboard in, but I am going to remove that because I've updated the dashboard since. Okay, so I need to add in a new one. You can see that the adjustable market profiles in here. I've got multiple copies of those as well, so I can get rid of those too. So let's just show you how this works then. So first thing is, I'm going to click and drag. So I have my EX4 file open on another screen. I'm going to click and drag into this folder, and you can see that it says IB underscore probability underscore dashboard has come in. So that's the EX4 file. Okay. Now what I'm going to do is exit out of here. Now there's two things that can happen here. First thing is we need to open our navigator. We need to come down to indicators here. We want to right click and click refresh. Okay. Once you do that, you will see that the indicator has appeared. Now, sometimes if you add it to the chart, it doesn't work first time. So that's why I showed you the MetaTrader compiler here. And I'll show you how to get to that after if it doesn't work first time. So in my indicators, I've refreshed it. I can see it's here. I'm going to click and then drag it onto the chart. Okay. I'm going to go through all of the inputs here. Just make sure everything looks okay. And then I'm going to click OK. Boom. There we go. So there we have it. I've got my initial dashboard, initial probability dashboard on the chart here. Okay, so you can see that it's in line with this. Okay, so this is the indicator I've been working on. Basically, what this is showing me is the first hour of the trading day, and then what happens from that. Now, I can obviously refine it as I'm going forward, but I've been working on how to potentially look at using the initial balance for opportunities in the market, for one. For two, looking at how a market could become either a trending day or a consolidative day, depending on how big that initial balance is. So you can see that here, it built it. I've built it in Claude, and I've just drag and dropped it over here onto MT4. So that's how you can add your own indicators in here, right? Now, obviously, if you need to refine it, like I've been refining this one, I'm looking at this already, and I think that we're probably going to have to refine this further. But two things you can do. So let's say it didn't come up on the chart, then you might need to compile it. To do that, you go into your tools and you come down to MetaQuotes Language Editor, okay, which will bring up this. And what you can do then is find the indicator in the indicators navigator, right? So just the same as what we did on MetaTrader 4's platform, you open the indicators tab, you should see that it comes down in there. And all you need to do is click on it and then hit compile. Make sure there is no errors, warnings, or anything like that. And then you should be good to go. All you need to do then is X off of this, come back into your navigator, refresh it again, right? Then click and add it to the chart. All right. So again, that's how you can add your own personal indicators onto MetaTrader. So hope you enjoyed this stream today. If you did, please leave it a like and subscribe. I'm going to do some more tutorials on MetaTrader throughout this trading week. So hopefully you enjoyed that one. If you do have any comments, questions, or anything like that, please let me know, and I'll get down to it too. So thanks for joining me today. Appreciate it. Speak to you soon.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.